Do you remember when we were kids and we used to play with rubber bands? And the farther you stretch that rubber band and then let it go, the more it snapped and the more it hurt. Hi, I'm Scott Carter with PM Capital, and I'm bringing you information today that might help you in your decisions in what and when you invest and diversify your portfolio. Well, that rubber band is kind of like our economy and our markets. We are stretching ourselves as far as we can stretch. Our national debt has doubled over the last 10 years. Corporate debt has doubled over the last 10 years. We're facing the most significant unfunded pension liabilities that we've ever experienced in our life. And yet, as investors, we don't respond to it. Now, if you think about that rubber band and we just keep pulling our economy more taut and more taut, when that thing snaps back to reality, it's going to hurt. It's going to leave a lot of pain. So investors need to be prudent and make sure they do the right things before the economy takes a snap back. For whatever reason, we have as investors the ability to forget about past pains. That's a good thing. We remain optimistic. But when you talk to most people about the 2008 Great Recession, the financial crisis, they think it was just a minor bump on the path to increased prosperity. But we're increasing prosperity by increasing our debt, weakening our dollar, and doing things to our economy that eventually we're going to have to pay the piper. So I want to let you know that you should be aware of this, and when you're making changes to your portfolio, it's better to be a day early than a minute late. And right now as investors, no one is taking into account the risk factor that's out there. I was recently reading this article in Bloomberg about gold's being set to soar. And what they say is that the reason why gold is going to be set to soar is that all of these issues that I bring to your attention are positive for gold. They're not positive for the economy, but they're positive for gold because it is the last hedge against inflation, against risk, against volatility that's in the market. And believe me, there's so much volatility. So if you're a prudent investor, which I know you are, and you want to have your portfolio diversified, if you think these issues that are really pulling that rubber band taut, like debt and like unfunded pensions and like student loan debt and VIX and all of these things, then don't just read about it and say, wow, that's a problem. Take some action. Look at your own portfolio, decide what's right for you, and maybe gold should be a part of that portfolio. It is the single asset that over 5,000 years has been a hedge against inflation in times like these volatile times that investors have gone to. Don't wait too late, get in early, and make sure that your investment portfolio is right for the times that we're living in today. If you want more information on this article, just click on it attached and you'll find out how to get more information and find out if gold is right for you in your portfolio. Thank you.